Hello, ladies and gentlemen. Good morning from this part of the world. And depending on whichever time zone you are tuning in from, good afternoon and good evening to you all. I hope we all had a blessed weekend and trust you do very well during the course of the weekend. And how well are you preparing for the new week? Well, for me, it has been quite an interesting weekend for me as I took my kids for their training, and we spent most of the time during at their coaching school, and of course their PTA meeting. It was a very short one, but I was able to make a worthwhile out of it. I hope you had a wonderful moment too from your own side as well. My own name is Sheriff Daramola, and as usual, we are going to be running today's Forex Morning Mastery, our first edition for the week. And of course, we will be looking into the market to see how we will be strategically positioning ourselves for potential moves today or for the first half of the week. And there's been quite a lot of interesting development across the global landscape. We talked about this yesterday for those of us who are part of the Forex market prep, which we normally run on Sundays. And since we are monitoring these three financial instruments, that is the USOILSPOT, the GBPUSD, and the XAUUSD, one asset that cuts across all of these instruments is the US dollar. And of course, in recent time, the US dollar has been supported by recent economic data showing a stronger than we saw a stronger than expected PPI, that is the producer price index, on Friday, which indicated a favorable inflation outlook. And of course, this also has strengthened expectations for further interest rate cut by the Federal Reserve. And currently, market participants are already pricing in a significant chance of a 25 basis point cut in November, which has kept the US Treasury bond yield elevated. And of course, the US dollar has been doing very well, especially during the last week. However, there are some mixed signals as well, which is going on the ground, like the geopolitical tensions in the Middle East, which has prompted a strong appeal for safe haven assets such as gold, silvers, and the like. And of course, this also has influenced the US dollar asset, which is considered to be also a safe haven. Meanwhile, the market sentiment is still being tempered by a dovish outlook from the United Kingdom front, where we see the Bank of England projecting a potential acceleration of interest rate cut, which could lead to a stronger dollar against the pound sterling. Remember, we are monitoring the pound sterling too as well. Are we going to be seeing a rise in the pound sterling this week, or is there a chance for the pounds to continue to drop to the downside? All of this we will be taking into account while we review the current market dynamics from both price action and fundamental perspective. So today we are going to be exploring all of these factors and how they are likely going to be shaping the price movement in the currency assets and of course the commodity assets that we are looking at. So I encourage us all to stay tuned in, as we do have some quite interesting and insightful ideas to bank on as we prepare for this week. And for those of you who are joining us for the first time, you are highly welcome on board. Very, very excited to have you join me today. And it's the Forex Morning Mastery. So what we usually do here is to come together to do follow-up details on the asset I personally monitor on a weekly basis, and these are the USOILSPOT, the GBPUSD, and of course my favorite amongst them, which is the XAUUSD. So we run this 3 times in a week: Mondays, Wednesdays, and Fridays, where we all come together to understand what is really going on in the market. And one thing I would also like to emphasize here is that this is not a signal service platform, but instead an avenue where we all come together to have, it's an educational avenue where we all come together to have a deep understanding into what is going on in the market, try to understand the behavioral patterns of market participants through the lens of price action and fundamental analysis. And trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach, which can eventually help you in developing your own trading strategy. And irrespective of whatever type of trader you are, a scalper, a position trader, or a swing trader, this session is tailored just for you, as we will be identifying entry areas using our key levels and structural patterns to help us manage whatever position we are. So you are welcome once again, and I do encourage you to engage in the comment section. Feel free to ask me anything as regards to the financial market, or if you need any further clarifications. And please do not forget to support the video, support the community by clicking on that like button. If you have found this content helpful, it goes a long way in inspiring me, of course, and at the same time it helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. And thank you very much as you do so. So with that being said, here we will be diving right into the business, and I can see your comment here, Tammy Klo. Good morning to you. I'm doing very well, and I hope you are doing very well too, and trust you had a good weekend as well. So as we have said, we will be diving right into the business, and as usual, the first thing we normally do, of course, is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And based on the asset we are monitoring for this week, which includes the GBPUSD, the USOILSPOT, and the XAUUSD, we will be focusing on high impactful event from both the United States and the United Kingdom economic docket. However, on days where we do not have high impactful event, we shed our light on mid-tier economic features as well, just for us to have a little bit of insight into what could be driving the sentiment in the market on that day. Now, today, Monday, October 14th, we do not have any high impactful event from both the United States and the United Kingdom. However, after including the mid-tier economic features, we see that we have a bunch of speeches from both economies today, which everyone in the market will be looking forward to. We already had one this morning from Dingara, that's from the United Kingdom. I'm yet to have an highlight into what the speech is all about, but before the end of the day, I will definitely get some hint into that. And of course, we all have three other speeches coming in from the United States. One is coming in from Kashkari, which will be happening by 1 p.m. UTC. That's about 4 to 5 hours from now. So we're looking forward to that one. We have Wala and of course Kashkari, which are all coming much more later in the evening. So we have it at 7 p.m. and 7 p.m. and 9 p.m. UTC. So I do encourage us all to mark out our calendars so that we can be around to listen to what he says. You can always get these updates on YouTube, Investopedia, and of course on FX Street too as well. So I encourage us all to mark out the timing as whatever this they are very important event, of course, especially after seeing that CPI and PPI data from the United States come in last week, and we want to hear what the Fed officials are saying or what they are thinking behind the scenes, as these speeches will be giving us a clue into their economic outlook and of course their potential monetary policy decisions in anticipation of next month's interest rate. So we will be looking at that, and of course I will be giving you updates in the commentaries of both my TradingView and Telegram platform. Now, besides this, I also want to call our attention to the major events that everyone will be looking forward to this week. In fact, this week is laced with more of economic features from the United Kingdom. We are looking at a high impactful event from the UK. We have the claimant count change, which is a labor-oriented data. We have the employment change. We have the ILO unemployment rate. These are data that anyone who is trading the British pound will want to look forward to, as it will be giving us an insight into how the labor sector in the United Kingdom is doing. Then on Wednesday, we have the consumer price index. You know, this is another impactful event. It's an inflationary gauge data that gives us a clue into the inflationary level in the United Kingdom. So we've been talking, the Bank of England governor has been talking about a gradual process in reducing interest rates in the United Kingdom, and of course inflation is a key factor in determining this. So the consumer price index from the UK, the PPI data from the UK are some event to look out for during the midweek. Then we also have the retail sales data, which gives us an insight into the consumer confidence in the United States economy. This is coming in on Thursday. We want to be seeing that one too as well. And in fact, that is the only high impactful event from the United States. Then on Friday, we also have the retail sales data from the UK, another impactful event. So you can see this week is jam-packed with a bunch of high impactful events from the United Kingdom. So the US dollar, for us who are trading the GBPUSD, this currency asset is going to be at the mercy of economic event from the UK. So the anticipation of this event definitely will be bringing in some distinct structural patterns that we are going to be using to strategically position ourselves for the next move. And for the fact that they are high impactful event, we are likely going to be seeing some volatility this week, especially on the GBPUSD, which could be giving us some profits to bank on. So that is that on the economic calendar. So I encourage us all to mark the timing out, and let's get ourselves prepared for the week. So with that said, let's dive right into the business. And as usual, the first asset we will be taking on this morning is going to be the what's it called again? The USOILSPOT, of course. So on the USOILSPOT, we've had quite some interesting situations in the last couple of weeks. Sorry. I'm sorry, guys. That was my boy. I had to attend to him. He needed my attention. So, where were we? So, we are starting this session with the US All Sports, and I was talking about what we were enjoying in the last 1 week. So last week we bought the US All Sport. Remember, price of the US All Sport increased significantly during the later part of last week, during the midweek stroke the end of last week, where we were able to run the momentum from around the $71 area into the $76 level before we started seeing some negative traction. And of course, the ascent of the US oil spot has been influenced by a couple of factors behind the scenes. Most importantly is the escalating tension in the Middle East, particularly the attacks from Israel on Hezbollah in Lebanon, and of course the intending retaliation from Israel on Iran, which of course has been increasing the fear of oil disruption from this particular area. And this concerns about potential disruption has further helped the oil prices to rise. And besides this major factor behind the scenes, which has been supporting the oil, there are other couple of factors behind the scenes which also could likely exert some downward pressure on the US oil spot. One of which is the data coming in from the Chinese economic docket, as that this morning we saw a lower than expected CPI and PPI data point to which could potentially weaken demand from China, demand for oil in China. Remember, China is the largest importer of crude oil in the world, and if the economy is not doing very well, it's usually seen as a red flag for buyers, as it is expected that China may likely reduce demand for oil due to the not so good economy. And secondly, the uncertainty around the Chinese stimulus. We talked about this last week, that China is planning to pump in about a trillion yuan into the economy to boost their GDP for the last quarter. So we are not really, the market is not really sure of what the implication of that is going to be. And the uncertainty surrounding the effectiveness and scale of the stimulus plan further dampens expectations for oil demand growth from China. Now, if we take into account all of these factors we talked about here, I still strongly believe that the path of least resistance still remains to the upside, except for if something new happens during the course of the week as regards to the Chinese stimulus. Now, if we take all of this data into the chart and let's see what has really been going on prior to the beginning of this week, what I did was to take into account the character of price action in the last couple of months, on the 1st of September to be precise, where I did identify the fact that price has been finding higher lows in that regard. And prior to this, remember, we were looking at a descending channel. Remember, for those of you who followed me through the last couple of weeks, we had the resistant line of that descending channel right here, as you will see, and we saw how that trend line had continued to support the bearish momentum before the trend line was finally breached and broken out of at the beginning of this month. And look at what happened. We saw price broke out of the structure, came back to retest it in an attempt to continue the uptrend move. So I still technically think that the momentum is still looking to the upside. And in addition to the fact that we have an ascending trend line in place, we need a key level to help us navigate this week's trading opportunity. So for this week, my key level is going to be around the $71.50 level, after taking into account the character of price action in the last 4 to 5 weeks. And if you look at this closely, you will see that how the $71.50 area had been a strong selling niche for about 2 to 3 weeks, as you will see here, where every attempt by buyers to break out was failed at every point in time before we finally saw a successful breakout at the beginning of this month. And looking at that, you see price broke out of structure. It appeared to come back, retest the structure. However, Despite the retest of structure, we can see price is yet to find a new high. As you will see, we have a lower high in place. Now, will this uptrend scenario continue, or are there any chance that sellers could come in at any point in time? Now, to be able to understand this in detail, let's zoom into this current structure. Now, this was the momentum from last week, as you will see, and buyers appears to be finding resistance around the $76 area. As you will see here, every attempt by buyers to break through that resistance level has been met with strong pressure, strong selling pressure from the bears. And if this is going to persist and price remain below this ascending trend line, this could trigger selling ideas. So what we want to be doing today is to see how the market will be reacting to this trend line as at the beginning of this week. Now, depending on what happens around this trend line at the beginning of this week will determine if we are going to be buying. And if for those of you who have been with me for a while, you know how we use our ascending trend lines. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that support the idea of buying, and we are not going to be considering selling unless this trend line is breached and broken to the downside. So let's see what has been going on since the market opened this week. And to do this, we will scale down into our execution time frame, which is the 1 hour time frame. Now, right here on the 1 hour time frame, we'll begin to see things more clearly. Now, the first thing I did on the 1 hour time frame was to acknowledge that temporary lower high I talked about after price action tested the $76 area, and this is the trend line I was able to spot here. So we have a descending trend line which supports the bearish bias. So if price remains below the trend line, we still look forward to selling ideas. Now, in addition to that trend line is the structure that has evolved, price action has evolved into this morning. So let me zoom in so we can see things more clearly. So if you look at this structure closely, you will see that since this new week began, price action started on a strong bearish note. Price started at around the $75.60 level, just right along that descending trend line to incite a massive engulfing bearish candle that you will see here. Now, immediately after this bearish engulfing candle, we saw how buyers came in around the $74.05 area, giving us signs that sellers are finding it difficult to break through that area. And what does this mean? We have a beautiful support line to help us navigate our trading activity for this week. So we have our resistance line here of this range bound structure at the $75.60 level, and then we have a support line at the $74.05 area. Now, for us to consider selling here, a breakdown of the $74.05 level is looking promising to join. Of course, everything is screaming bearish at this point. The week started on a strong bearish note, and the inability of buyers to recover from the strong bearish momentum. As you can see, we have a barrier at the $74.75 level. If this persists, a breakdown retest of the support line right here is all we need to continue a downtrend move. And please ensure that you have enough room for price action to move around. That is, I'm talking about your stop losses. So stop loss will be somewhere right above that $74.75 level, dovetailing to between 65 to 70 pips stop loss in that regard. So let's see how the market is going to play out from here. So that is our bearish bias on the USOILSPOT today. Now, I also want to say this here. I personally have not joined a bearish move right now, as I will need price action to give me a confirmation before jumping into that sell position. Now, what I want to be looking out for here is price breaking down the structure. Then I scale down into a lower time frame like the 5, 10 minutes or even a 15 minutes time frame to look out for price retesting the structure in an attempt to continue the downtrend move. So if I can see signs that buyers are finding it difficult to maintain or sustain momentum above the $74.05 level, I will be willing to join a downtrend move. However, in as much as we are looking out for selling ideas, we cannot ignore the potentials that buyers could come into play anytime soon. Remember, during the midweek last week, price has been finding higher highs and higher lows, and this has been subject to the escalating tension in the Middle East, of course, which has been supporting the asset in price. So we cannot ignore buying potentials as well. Now, if we are going to consider buying the US All Spot this week, what are the chances they have and what structures do we want to see manifest or get mature before jumping into a buy position? Well, I've identified a simple structure here. The first thing I've observed here is this barrier around the $74.75 level. As you will see, in the last 1, 2, 3, 4, 5, 6, 7, 8 hours, buyers have been finding it difficult to break through that area. So for me, that is serving as a temporary resistance line, and in fact I will need price action to break out, retest this resistance for me to be convinced to join a bullish move. So for me to buy, let me give a visual representation. I would like to see price breakout, retest structure, then I want to continue the uptrend move, and a breakout of the $75.60 level will be another opportunity to add more buy position. In fact, by the time price breaks out of the $75.60 level, price will also have broken out of that descending trend line, hereby helping us to understand that sellers no longer have a say at this juncture in the market. So that is the only condition that will make us consider buying the US All Spot today. So these are the views we are looking at. At the moment, it is looking strongly bearish. The week started on a bearish note, and the inability of buyers to break out of that resistance at the $74.75 level continues to support a bearish idea at this point in time. So let's see how this is going to play out going forward. So that is my simple view on the US All Spot for today. So let's see. If you have any questions whatsoever or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. And don't forget to give that video a thumbs up. Thank you very much as you do so. See you in about 10-15 seconds from now. Cheers. All right, all right. Good morning, Anolua John. Glad to have you around with us this morning. Trust you are doing very, very well. All right, so in the absence of no questions, I want to assume that we are all on the same page. So I think we can move on to the next asset on our watch list, right? So let's move on. And I'm yet to see your likes, guys. We are having over 11 people on board, and the likes is still very, very low. Please let's ensure to make the likes tally with the number of people on board. This goes a long way in helping the algorithm identify this video and push it to a wider audience, hereby helping this community to grow. Thank you very much as you do so. So with that said, let's move on to the next assets on our watch list. So the next asset we are looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And in fact, last week wasn't that really good for us in this community. Remember, the market was really choppy throughout the most of last week as price action kept on consolidating within a specified range bound structure, further emphasizing the prevailing uncertainty in this particular market. And in fact, we saw some high level of volatility during the midweek after the CPI and of course after the PPI data, but that movement did not really was sustained as price keeps snapping back into the entry point, and as a result we really did not have anything worthy to take home on this asset last week. However, going into this new week, things are looking a little bit hopeful for buyers of the GBP USD, though the week started on a strong bearish note. But during the Asian session, we noticed some deep buying activities, which has given the pound sterling a lifeline ahead of the economic data coming in from the UK this week. And remember, at the beginning, I did mention that we have a bunch of impactful events from the UK this week that will be influencing the sentiment in the market and probably bring in some fresh impetus. We're talking about the CPI data, we're talking about the PPI, and of course, we have a couple of labor-oriented data from the UK, which will be giving market an insight into what they will be doing next. However, if we go ahead to look at the fundamental factors behind the scenes, most of the factors is not in favor of the British pound. So we are talking about geopolitical uncertainty, safe haven flow towards the US dollar has increased significantly due to the rising geopolitical risk and putting downward pressure on the British pound. And of course, we also have this stronger than expected data coming in from the United States last week. We saw a good US producer price index, a robust September job report from the United States as well, and of course the CPI data, which also gave an insight into an ease in inflation in the United States. Now, the market is likely to expect further interest rate cuts from the Fed, depending on what happens in the next couple of weeks. But at this point, there is still a majority of sentiment leaning towards a 25 basis point cut in the United States. Now, besides this is the expectation of the Bank of England cutting interest rate in November. And from the sentiment indicator, there is about 90% market probability that Bank of England will be cutting interest rate next month. And this obviously has further exerted downward pressure on the British pound. Now, this sentiment was driven by the Bank of England's Governor Andrew Baylis about potentially more aggressive interest rate cut, which is definitely weakening the pound sterling at this point. Then another factor, if we look at the overall market sentiment, the initial positive reaction to the UK's economic data faded quickly last week, suggesting a general bearish sentiment towards the British pound. So we will be leaning towards this economic data this week to see what the labor sector is doing in the United Kingdom. Is it going to be rosy or is it going to be tight? So everyone is looking forward to that. And as a result of the expectation of this economic data from the UK, we may likely see major key players in the market step aside, waiting for this data to come in before making any aggressive bets. So as a result, we may likely see an extended sideways trading activity during the first half of this week. So I want us to take that into perspective. Let's take that into account while we are reviewing the structure. So that means that whenever we have a position triggered, we ensure that we move our stop loss up to break even at least quickly, so that we don't get caught up in situations where price will snap back into entry point or even reverse into the opposite direction, taking us out of all positions in a loss. Now, taking all of this into perspective, let's bring it down into the chart and let's see how the market has digested these possibilities and these expectations ahead of this event. So the first thing I did here was to start my analysis. I think I started on the daily time frame, and on the daily time frame, what I did here was to take into account the character of price action since the month of May, and that's about June, July, August, September, October. That's about 5 to 6 months of historical data, and it is quite clear that the market has been on a strong bullish momentum. And if we connect the series of higher lows here, this further emphasizes the strength of the buyers, as you will see here. And as long as we have price remain above our ascending trend line, what do? We continue to look out for patterns and structures that support the idea of buying that asset. Now, in addition to the ascending trend line are a couple of levels that we will be using to navigate this market today. Now, one of the key structures that we are going to be using this week is the key level I was able to identify around the 1.30750 area. In fact, it took me a while before settling for the 1.0750 area, as I was looking at the 1.03400 too as well. And the reason why I was looking at that is the fact that if you go to as far as the month of July, we can see this area was a strong selling niche before that level was broken out of at the mid-month of August. And since the breakout of that area in the month of August, you can see price had maintained that area. As you will see, every attempt by sellers to break through has always been met with strong resistance from the buyers. And in fact, last week, throughout the course of last week, we saw how despite the strong bearish momentum that came into that structure, sellers were unable to break through. And what does this tell us? It tells us that this area has a strong memory for buying powers, which is evident from sellers' inability to break through that particular area. So personally, my key level is around that structure. And besides the key level here is the demand zone I was able to spot after capturing the last 2 months of trading activity. So we have the area between the 1.300 level and the 1.30750 has our demand zone. And as long as price remains above the demand zone, it doesn't make any sense for us to sell. Now, the only condition that will make us sell is for this demand zone and our key level, and of course the ascending trend line to be breached and broken to the downside. And look at how beautifully all of the structures are all lining up together. So we have the ascending trend line, we have the key level, and of course the demand zone, all wrapped up in one particular place. So will this area support an uptrend continuation, or is it high time for price to crash to the downside? Now, the event coming up this week will be playing a key role, but the structures we have here will be making us understand the behavioral patterns of market participants and help us to be right on point to join whatever momentum this week is going to give us. So now what we are going to be doing now is to scale down into the lower time frame, our execution time frame, that is the 1 hour time frame, to see how the market has been reacting to this particular zone since the beginning of the week, to determine any form of structural pattern that we can rely on to join either a buy or sell. Now, I'm even reconsidering returning my key level to the 1.3040 area, just right here. It's looking reasonable for me, actually. So let me see. I have it. Okay, 1.30400 area. It's a psychological level as well. So let me just place it right there and delete this one right here. So I think right here is looking much more reasonable. So we have our key level at the 1.30400 area, and you know how we use our key level, right? As long as price remains above the key level, we will maintain a bullish bias, and if price breaks down the key level, then we will start considering selling. And look at that, the key level and the trend line are right on the same area. So if price breaks down the key level, price will also have broken down the ascending trend line, hereby welcoming selling ideas. But if price remains above the structure and any form of reversal pattern like double bottom, inverse head and shoulder, or a falling wedge will welcome buying ideas. So now let's scale down into the 4 hours time frame. I think we have a structure on the 4 hours time frame, or are we just going down into... Okay, so we have a structure on the 4 hours time frame. So right here on the 4 hours time frame, this was what I was able to come up with. So this is the key level. So we've readjusted the key level to 1.3040 level, right? So I would relabel this. So we have 1.30400 level. I encourage us all to mark out the structures accordingly on our chart, as they are going to be serving as significant reference point. Now, in the last 1 week, we saw this descending channel in place. So when we connect the series of lower lows, we have the support line of the descending channel. And then when we connect the series of lower highs, we have the resistant line of that descending channel. Now, if it so happens this week that price breaks out of the resistant line of that descending channel, then this will be a good opportunity to continue that uptrend move. So you can see in the last 12 hours or so, price has been trading around that resistant line, as you will see here. In fact, we will see things much more clearly when we get down into our execution time frame, which is the 1 hour time frame. So scaling down into the 1 hour time frame, this is what we are looking at. So I will just zoom right into the current structure that is our center of focus. So these are our center of focus for today, for this week, sorry. So for the first half of this week, this is our center of focus. So what you will notice here is that price indeed, just like in the USOILSPOT, price started on a strong bearish note, as you will see here, with an engulfing bearish candle. But as soon as price action got into that area between the 1.30500 level and the key level at the 1.304 area, we saw buy pressure resume, and this was within during the Asian session, triggering some deep buying activity and pushing price back into where it started the week at around the 1.30700 area. Now the question here is, will this level be broken to the upside? Well, that is another patience for us to take on that one. Let's see if the market will break out of that structure. Some of us did. I got some personal messages. Some of us did took this buy position from this here. If you took that opportunity, well done for identifying that opportunity right there. For me, I didn't get that. It was late. It was in the middle of the night in this part of the world when price action was trading around that area. So I was definitely fast asleep. But right now, price action is at this resistance line, this trend line here. So we are looking forward to see how the market is going to react to that trend line. Will that trend line be broken out of? Will it be breached and broken out of? If it gets broken, this will further emphasize the strength of the buyers. But if it gets respected one more time, that is still serve as a barrier for buyers, I will be looking forward to see price retrace back into the 1.3050 area, the same area that was serving as a buying platform during the Asian session. If it comes into that area, that's a good discount for me to join an uptrend move. So once it drops into that area, I will definitely look out for buy pressure on my lower time frame to join an uptrend move. But if that is not the case, a breakout retest of the 1.30700 area, I think, is enough for us to confirm an uptrend continuation. So let's see how the market is going to play out here. Things are looking a little bit bullish for the British pound this week. And like I did say, we may likely see price trade within this range for an extended period of time, waiting for the economic data from the UK to give us a clue, after which price will break down the support line of that range bound structure to incite a sell-off, or break out of the resistance line to incite a buying opportunity. So we need some level of patience around this current structure this week. So let's see how the market is going to be playing out within this particular area. Now, selling the GBPUSD, for me, I will need some follow through at this point. Look at what happened here last week. We saw that sellers were unable to continue the momentum. This area here between the 1.30500 and the 1.30400 has been a buying niche since the later part of last week. And for me, I will rather want to see price action slice through this zone to the downside before I start considering selling. So before I can sell the GBPUSD, I would like to see some signs of breakdown, retest of structure around this area, continuous selling pressure showing signs that buyers have lost the momentum before I join a bearish move there. So of course, I will definitely be with us all in the comment section of both my TradingView and Telegram platform to give us updates as at when due, or if any new development comes in here. So a quick recap here, just to make things a little bit simple for us to comprehend and understand. So what we are doing now is wait for price to come into the structure. If it does come into the structure, we look out for buying pressure to continue an uptrend move. But if that does not happen, then a breakout of the 1.3070 or the breakout retest of that descending trend line is all we need to continue that uptrend move. And the only condition that will make us sell is for that demand zone here to be breached and broken to the downside. So that is what we are looking at on the GBPUSD for this week. So let's see how the market is going to play out. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions, and do not forget to give that video a thumbs up. Click on the like button. That's the cheapest way you can actually help this community to grow. Thank you. Thank you very much as you do so. See you soon. All right. So, in the absence of no questions, okay, I see you were Coach at Kingdom. Good morning to you. All right. So, in the absence of no questions, I want to assume that we are all on the same page. I hope you've marked out these levels and structures accordingly on your chart, as we will be needing them to navigate this market dynamics. So, let's move right into the final assets on our watch list for this week. Stay tuned in. So the final asset on our watch list for this week is my favorite, and that is the XAUUSD, popularly known as the gold spot. And last week was very profitable for us. As you know, we were able to capitalize on both selling and buying opportunities during the course of the week. And I already done a top-down analysis on the XAUUSD, which I shared on all of my platforms. I hope you watched them. I did that yesterday, so I will not be going into the higher time frame. If you missed out on that video, I encourage you to watch that video so you can have an overview, a deep overview and deep understanding into how we got to this point that we will be deliberating on the 1 hour time frame. So in my video, we talked about the fundamental factors behind the scenes which has been influencing the sentiment in this market. And in fact, the first 3 quarters of the year, we saw how the gold kept on breaking record highs at every point in time. And right now we have price action trading within uncharted territory, zones and levels where price action has never been before. And this ascent in gold prices has been supported by escalating tensions in the Middle East, that is geopolitical tensions, and of course the anticipation of Federal Reserve interest rate cut since the beginning of the year, which culminated into a 50 basis point cut last month. And of course the increased purchase of central banks across Euro-Asia, most especially, has went on to support the ascent of gold. And in fact, watching some market reports from financial experts during the weekend, there is this projection that gold is likely going to hit $3,000 this year. Well, I don't know. You know how we do it here. We usually take it a step at a time. So we don't know, but that is what the majority are saying. And the chances that the Fed is going to be cutting interest rate more this year, I think we are looking at another 50 basis point cut before the end of the year. That is 25 basis point cut in 2 or 3 places before the end of the year, and this could further support the prices of gold. Now, these geopolitical tensions we've seen in the Middle East, the escalating tension in the Middle East, are boosting demand for safe haven assets such as the gold, and it doesn't appear that this situation or this tension is going anywhere soon. So as a result of this, I still strongly believe that the path of least resistance for gold is still on the upside. Now, China's pledge to increase debt and revive its economy, although lacking specifics, provides some optimism for global market too as well. So that is another driver that buyers of gold could also look forward to. Now, in as much as the path of least resistance for gold is to the upside, we cannot ignore the potentials that sellers can also come into play at any point in time. Now, the US dollar remains very strong at this point. If the dollar continues to be strong, the gold will become much more expensive for investors to buy. And if that is going to be the case, this could reduce the demand for the gold commodity. Then the US Treasury bond yield too has been recovering lately. Recently, we have it running at above 4%, the first time in about a couple of months, and this reduced the likelihood of more aggressive Federal Reserve interest rate cut, pressuring the gold too at the same time. And of course, we know how the US Treasury bond yield is directly proportional in value to the US dollar. So if the US Treasury bond yield is doing very well, it is expected that the US dollar will continue to rise, which obviously is going to impact the gold negatively. Now, with the US market closed for Columbus Day, I think today is a public holiday, I forgot to mention that earlier, gold remains highly influenced by the US dollar price dynamic and fresh geopolitical updates. So everyone is looking at the Middle East for clues of what will happen there to decide whether or not to maintain their position on the gold commodity. Now, with all of these drivers behind the scenes, it's important for us to understand how the market is feeling about this information, how they are digesting this information, and this, of course, we can see through the lens of price action. Now, going into the chart here, the first thing I did observe on my 1 hour time frame, that is the execution time frame, is that price action has found a new structure, a new trend line to work with for this week. So after connecting this pivot from last week Thursday, we have a beautiful trend line to work with. So you can see price remains above the trend line. We saw price break out of this trend line here on Friday, and since then price action had continued to maintain a strong traction above the structure to find another high at the $2,667 for the first time in about two weeks. Now, with the way things are going right now, it appears we are seeing some selling pressure after price tested that high, and then we might likely see price retrace back into the trend line, which could be a good area to look out for more buying opportunity to continue the uptrend. And in fact, if price breaks down the trend line, then this could incite some profit-taking activities that could bring in some massive sell-off at this point. Remember, I told you the US dollar is still looking very strong based on the recent data we were receiving from the United States. Now, in addition to that trend line, here is this range bound structure I was able to spot this morning. As you will see, the week started on a bearish note, dropped into the $2,643.50 level, and then we saw price come back into where it started the week, giving us a range bound structure where price action was initially confined within the 2,656.75 level and the $2,643.50 area to emphasize the prevailing uncertainty at that particular point in time. Now, this led to the breakout of the structure, which I actually missed out on. And of course, we can see price has broken out of that resistance line. And theoretically, whenever price breaks out of a key structure like this, we expect at some point in time price will come back, retest the structure in an attempt to continue the uptrend move. Now, will this be the case at this point? Well, patience is required at this juncture. Will price do that? Let's see how the market is going to be reacting to this particular area. Are we going to be seeing buy pressure around this area to inside buying opportunities from here, or will price still drop further into the trend lines to join an uptrend move? So we are at a crucial juncture where I will be monitoring how the market will be reacting to this important zone in the next couple of hours. So this will determine, so this area here between the 2,660 and the 2,656 area is where my center of focus will be in the next couple of hours. So if I can identify buy pressure there, I will be jumping in to run that uptrend continuation. For those of you who will be with me during the go challenge, of course you will see how we will be navigating the structures together. So we will be starting that in the next 30-40 minutes. So I encourage us all to stay tuned in on that one. So this is my view as regards buying. So we have two bus stops to look out for buying opportunity. The first one is between the 2,660 and the 2,656, where we want to see buy pressure to join. But if price action drops into the trend line, then we will be looking out for buy pressure around that area to continue the uptrend move. But for selling the XAUUSD, I would rather want to see price take out this demand zone, this support line at the 2,643 before considering joining a bearish move. So that's from a long-term perspective, for me to join this bearish move to the downside. However, we still have a chance of seeing selling opportunities even before that structure is broken. That is, if we can see something like price breaking down the trend line, retesting it, showing us signs that buyers are finding it difficult to climb back above the trend line, then we could actually join a sell opportunity earlier than the breakout of the 2,643, hereby giving us an opportunity to maximize the bearish move. But as it is right now, we are maintaining a bullish bias here since price still remains above the ascending trend line. But trust me, I will be with you in the comment section of both my Trading View and Telegram platform to give us updates if I see any new or interesting setup evolve, especially on the 15-minute time frame. So these are my simple view on the XAUUSD. I hope I made myself very clear. But if you have any questions or you need some further clarification, feel free to let me know. And trust me, I'm here and willing to be of help in that regard. So I will take the next 10-15 seconds as always to see if there are any questions whatsoever before we start rounding off on today's Forex Morning Mastery. So see you soon, guys, and do not forget to click on that like button. I want the like to tally with the number of people on board. And for those of you who had clicked on the like button, I really appreciate you from the bottom of my heart. Thank you very much, guys. And for those of you who are yet to do so, please, it doesn't cost you anything. And thank you very much as you do so. So see you in about 10-15 seconds from now. All right. So, hello, Richard Blackett. Good morning to you. Hello, how are you doing? Glad to have you around. I also see you, Nasir Sahid. Good morning to you, Nasir. How are you doing today? I'm doing very well here. Thank you. So Nasir says here that we know that gold is bullish in sentiment. So could you please guide us that until where it should take a retracement? Of course, I think we just talked about that right now. We've identified structures that we are going to be using to navigate the market today. So I don't want us to make things too complicated for ourselves. I can feel some level of frustration in that statement there. Nasir, I can understand how you mean, but one thing we should understand is trading is simple if you make it so, and the only way we can make it simple for us is to have structures that will guide our decision making. Now, if we have structures, the next thing we want to be doing is to be disciplined enough to follow through with those structures. Now, if you look at the gold commodity we just talked about now, we've identified structures that we are going to be using to navigate this market, one of which is the ascending trend line we spotted here. So let me just highlight that all over again. So we have an ascending trend line in place. And remember what I said earlier, you know how we use our ascending trend line. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying. So we at this juncture, price remains above the ascending trend line. Hence, we want to be looking out for structures that support buying ideas. And because of this, we identified a couple of areas to look out for this, one of which is this area between the 2660 and the 2656. Remember, I showed you this resistant line here. We had price break out of this structure, and we may likely see a retest here where the appearance of buy pressure here will give us a confirmation to continue the uptrend move. So that means if sellers are finding it difficult to break down the 2656, buy pressure continue to persist there, we will be joining buying opportunities. But if price slices through that structure down into the trend line, then we will exercise patience to see how the market reacts to this trend line. And how do we do that? We scale down into a lower time frame, 5, 10, 15 minutes time frame, to look out for continuous buy pressure, that is sellers finding it difficult to break down the trend line. Then that will give us confidence to continue the uptrend move. And always remember that you want to be having a well-defined risk management strategy in place. Be consistent with your approach. If you are risking 1% of your account, maintain that 1% all through the trades you're taking, and always give enough breathing space for price action to move around. I mean, having your stop losses in place. Like this case scenario, if you are selling, buying from there, let's have the stop loss way below this descending trend line we identified in my weekend video on the XAUUSD. So if you have not watched my weekend video on the XAUUSD, I encourage you to go ahead and watch that video to see how important that trend line is. So that is what we are looking at to join a bullish move. So I hope you understand what I am saying here. So you dropped another comment again. You said in 4 hours candle there is a lot of liquidity, and it seems to be that it will drop down further as my buy position triggered from 2660, so where I will adjust my stop loss to. I'm not sure I understand what you mean. How many pips of stop loss are you using for your trade? That's another thing you need to do. And are you a day trader, or are you a scalper, or are you a positional trader? These are things you need to know before joining a trade. So if you are a day trader, you only want to be trading on 15 minutes 1 hour time frame, and 15 minutes time frame is quite okay for a day trader. If you're a scalper, you want to be going lesser than that, and if you are a swing trader, you want to be trading on a 1 hour time frame. Now all of this time frame will have different stop losses, will have different room for price action to move around because the structures are quite different. So if you are looking at the chart as a scalper and you're going into the 4 hours time frame, you have a lot of confusion in place. So you need to determine that, are you a swing trader, a scalper, or a day trader? And if that is the case, where is your entry point? So if you are if you're a scalper, for instance, and you have your entry point at 2,660, can you afford to have at least a 100 pip stop loss? That is one question, and this is subject to the account size you have. So what is your account size? Are you having a $100 account? Are you having a $1,000 account? Or are you having a $10,000 account? So these are things we need to take into account. First of all, you need to know what type of trader you are, and you have to be consistent with that approach. So what we simply do here on the Forex Morning Mastery is to identify zones and levels where we can either buy or sell. And depending on whatever type of trader you are, you can choose where your stop loss will be and TP target will be in that regard. So I hope I'm making a lot of sense here. And if I don't, please let me know. I can still clarify, make some further clarification on that one. So you said you are using a 1-to ratio. So how many pips is that? How many pip stop loss are you having when you're buying at a 2,660? You bought on the 1 hour time frame. So how many pips of stop loss are you using? What's your lot size? These are important questions. Now, if you lose that trade, how much are you losing from your account? Is it something you can handle emotionally? If you have like 100 pip stop loss on this account and you lose that stop account, is it something you can manage emotionally? If that amount leaves your account size, your portfolio, is it something you can manage? So these are things you also want to understand. So in that regard, you will not have too much pressure on your shoulders. So you said you are risking 0.5 lot size. That's quite huge. I don't know your account size anyways. What's your account size if you are risking 0.5 lot size? And what is your stop loss on that account? What is your stop loss on that account? And how much are you risking in your portfolio? If price takes you out, will you be comfortable with that loss? Okay, you have a 25k account. That's good. All right, 0.5. What's your stop loss? What's your stop loss? How many pips is your stop loss? $2,655. So let's look at that together right now. 2,655 from 2,660 to 655. All right, so that's about 73 pips. So personally, that stop loss is not quite okay for this situation. Why is that so? Well, let me explain to you why that is. Now, if you look at the structure here, we have an ascending trend line right here. And what happens when we have an ascending trend line? The momentum is bullish. And of course, as long as price remains above the ascending trend line, we will maintain a bullish bias, right? Now, if your stop loss is around 2,655, which is right here, that means you are not giving enough breathing space for price action to move around, because price is still way above above the ascending. Your stop loss is still way above the ascending trend line. So in this case scenario, your stop loss want to be somewhere around the 2,650. That's between 80 to 100 pips of stop loss, and then you can calculate what your risk is going to be, and that will give you an adequate lot size to enter that particular trade. So with that said, you will have enough room for price action to move around. You have enough room for your stop loss to capture any form of volatility that could happen throughout the course of the week. And in fact, when you have such trades, you don't necessarily need to sit on your screen. You allow the trade to run, and then probably come back once or twice in a week to check your position. So that is what I would say there. I hope I made myself clear on that one. So with this 2655, you will be in a lot of tension because price action is already moving close to your stop loss, and that will affect your decision and then your subsequent entry plans or subsequent trades will definitely be affected on that one. So I think I made myself clear on that one. I'm running out of time right now. We're supposed to be starting the go-go challenge very soon. All right. Okay, you are very much welcome. I'm glad you found that useful. So with that being said here, I think we have come to the end of Love You Too, Saeed. Glad to have you here. Looking forward to seeing more of you. So with that said, I think we have come to the end of today's Forex Money. And if you do want to scalp the gold market with me, you can join the Go-Go Challenge. You'll see how we do this live right on that platform. So I look forward to seeing you there too, Saeed. And do have, I wish you the best of luck today. All right. So in the absence of no further questions, so I think we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really appreciate the moment I had with you. Today we were able to take on all of the 3 financial instruments on our watch list, which includes the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD, where we were able to identify simple trading setups that we are going to be using to navigate this market today. And I do hope you marked out these levels accordingly. If you have done so, well done to you. Let's exercise patience and allow the structures to mature. Always remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's have a well-defined risk management strategy in place. So for those of you joining us for the first time, I do hope you are able to gain 1 or 2 things, and I do hope that I look forward to seeing more of you. Same time on Wednesday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare ourselves for the second half of the week. So see you soon, and I wish you the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.